Welcome back. Well, the equity market at the index level is having a quiet session so far, but let's focus on commodities. Remember, Manisha told us earlier that crude made big headlines. It fell quite a bit overnight. Let's see what else is happening. Manisha, fill us in.
Oh, well, it is crude oil prices which have declined quite sharply. I could have spoken about gold and silver, which gained 2 to 4% overnight. But this headline is clearly from crude prices because the decline has been really sharp. We are trading at a 3-week close with the kind of decline that we've seen. And with that, it nicely brings us below $60 a barrel for the WTI prices. And the Brent, which was trading at 65 last week, is trading at just about 62 right now. Well, to begin with, it is about the OPEC meeting. And of course, the broader liquidation of the futures contract. A lot of people seem to be closing their positions way ahead of the holiday season, and that is what seems to be bothering the markets. But yesterday we also had the OPEC report that came in yesterday, and that is those reactions that you're looking at as well. So OPEC says that the supply is expected to exceed demand in third quarter of 2025. It already has done that, and for the next year as well, they're looking at a slight surplus in 2026 also to the tune of 20,000 barrels per day. But interestingly, while the number may be very strong, OPEC earlier has been talking about a supply issue, as in a lesser supply. But now they're talking about a surplus supply, and that change in narrative is what is weighing onto the markets there. OPEC also says that they have overall pumped nearly 43.02 million barrels for the day in the month of October, which is lower than what they've done in September, majorly because Kazakhstan pumped lower. But remember, OPEC has increased by nearly 2.9 million barrels per day in sense of production. Not all of that production has come into the market, is the reason OPEC also has increased a very small hike for December and have planned to do nothing for the first quarter of 2026 therein. The IEA report also came in yesterday, and they expect production at 106 million barrels per day next year, while the consumption is expected at 104.1. So that immediately gives you a 2 million barrels per day of a deficit, or rather a higher supply in the year 2026, also weighing onto the market. So production is more and consumption less. The markets also are looking at the U.S. output, which also is on the higher side. The oil output from U.S. is expected to hit a record of 13.59 million barrels per day. And they're also saying that the inventories have continued to increase in U.S. for the last couple of weeks itself. So whether it is about OPEC report, IEA expectations, non-OPEC and U.S., we are looking at production increasing everywhere and consumption clearly not keeping pace with that. Take a look at the data on IEA also put out in sense of supplies and demand expectation. Now, this is the supply glut expectation coming in from various agencies. Mercury has put it at 2 million barrels per day. 4 million of an excess supply is what OPEC, IEA and World Bank have put out. Goldman Sachs report came in last week. 1.6 is what they're putting out, and CNBC puts it at 1.5 to 2.5. So one thing is very clear, that we are looking at anywhere between 1.5 to 4 million barrels per day of an excess supply in crude in next year, and that perhaps could continue to weigh onto the prices. At these current levels, we perhaps see much of that already factored in. Now, this is a way forward for the crude oil prices. EIA, with their report yesterday, suggests that $55 of an average price is what you could be looking at in the next year. And then you have $50 a barrel is what CNBC puts out. 62 to 68, we have World Bank and Citi putting out as well. But it really is within 60s and 50s that most of these banks and brokerages believe that the crude oil prices could be trading within. We also have Bank of America talking about 64, and then at 60 from Morgan Stanley. Within 50s is Goldman Sachs and JP Morgan talking about 55 to 58 of an average for the next prices. So as I said, between 50s and 60s is where perhaps we could be looking at in crude oil prices for the next year.
Okay, all right. Thank you for that. So crude definitely in focus today. Manisha, thanks for all the details. You need to take a